Right, hi guys, this is Adam Khoo here, and it's the 14th of April, so on a Sunday, before the market opens again tomorrow on the 15th of April. So doing a quick check on the markets, let's take a look at the S&P 500. Since the start of the year, we have been extremely bullish. The market's up something like about 8% year to date, if I'm not wrong, or in fact a bit more. So if you have been following my videos, my market analysis, you know where we're coming from. We had a very strong resistance at 2815 on the S&P, and this was a breakout. We had a breakout here and it pulled back and found support at the 20 EMA, and then it went and continued that breakout. So like I mentioned in my last video, my next target for the S&P would obviously be the all-time high of 2940. So that's the all-time high. We're now at 2907. So we've got about 33 points to go before we hit that all-time high. So again, once we hit that all-time high, this would be a potential level of resistance. Okay, so we got to see if we can clear that level. For my short-term trades on the S&P using call options, I've started to take some profits off the table. I'm sorry, taking off profits, and I'll probably take my final profits off once we reach that resistance level. Okay, and if we are able to break above that level and we can find support, then we could go all the way to, you never know, 3,000, 3,200 points. So that's when I'll probably enter more short-term trades on the S&P 500. Okay, for my investments, I'll just stay invested in the markets. I keep saying that no one can predict the future, no one can predict the market, so we just follow the trend. As long as it's on an uptrend, I stay long. If it's a downtrend, I begin to take short positions, either by shorting the market using put options or using inverse ETFs. So right now we are very bullish, and the market should continue to go up at least for the next couple of weeks or days before we hit that level of resistance. Now, if you've been following my YouTube videos for the last couple of months, you know that I talk about a lot of opportunities, and one of the opportunities I talked about last year was the China market. Because of the trade war between the China and US, the China markets were really undervalued, and I said it was a great opportunity to buy China stocks and China ETFs. And this was back last year on August of 2018. So let's see how that has been doing so far. So one of the best ways to get exposure to the China market is to buy the Chinese ETFs. And you can buy the China ETFs listed in Hong Kong or buy the ones listed in the US. So I buy both, and I'm going to show you the one listed in the US. It is GXC. Now GXC is just one of the many Chinese ETFs. There are many of them. You've got EWH, you've got FXI, you've got CAF. But I tend to buy a lot of the GXC, right? So this, as you can see, is the China ETF listed in the US markets. There we go. So you can see that this was the downtrend as a result of the trade war. And since then, we have broken above that resistance, and we are now in a very nice uptrend right now. Okay, so again, the China markets are still undervalued, and I still see a lot of room for it to run. In fact, the all-time high was $123, and currently it's at $104. So there's still pretty much still a lot of upside before we get to the all-time high, of which, if we can break above the all-time high, we will make, again, newer highs and all those things. So for those of you who went into the China markets, like I suggested last year, you should be making really good money and really profitable at this stage. All right. So far for the month, this is one of my accounts for the month to date, MTD month to date. I'm up about 8.3% for April so far. April's not over yet. It's only the first 14 days, up 8%. So pretty decent for the year to date. Up about 36.96% for the year from January to April of this year. Like again, been profitable every single month, but I don't expect to always have a positive month, right? You can have negative months sometimes. And I've mentioned before that on any given year, my target is about 50 to 60% return. If I can get 50 to 60% return a year, it's a pretty decent year for me. So far for the first 4 months, I'm up 36%. But again, the market and performance is never linear, it never goes up in a straight line. There will be ups and downs. So on average, I could have, down months as well, but I'd like to end up the year at least 50 to 60% return for the year. If you can compound it every year, that's a pretty good way to build your wealth, okay? Other things I've talked about in the past was, again, Facebook. For those of you who have watched my video, how I analyze Facebook, I said Facebook is a great company. It was really undervalued because of the bad news, because of the data scandals. It was a great time to enter Facebook the moment it changed into an uptrend. So let's take a look at Facebook and where it is right now. There we are. So you can see this was the data scandal that caused the initial gap down of Facebook. And again, I've mentioned this before, whenever a company has bad news and the stock gaps down, don't jump in at that moment, right? Never catch a falling knife. You never know how much lower it's going to go. So always wait for a change in the trend, all right? You can see here was a very, very clear downtrend, okay, with a very strong level of resistance. Very nice channel here. So over here, you can see it broke out of that resistance. The channel over there made a new high and a new low, right? So the moment it makes a higher high and higher low, especially when it crosses above the 50 moving average, that's a great time to start accumulating the stock. It went up and found resistance at 172, broke resistance, and now it's at 179. So Facebook has broken the resistance and all clear skies ahead. So I'm going to see Facebook is going to easily make it back to about $220 in the next couple of weeks or months, right? And once it reaches again that all-time high, if you can break above that, you're probably going to see about $250, $300 on Facebook, right? So Facebook doing really well. Very happy with it on my portfolio. What else have I talked about recently? Yeah, if you've watched this video of mine, how I pick great companies, right? I talked a lot about some of the China stocks that I invested in. And again, these China stocks, you can buy the ones listed in Hong Kong or the ones listed in the US markets, right? So I tend to buy both, and I'm going to show you the ones listed in both markets. So one of the stocks I talked about a lot was Piranha Insurance, okay? And I mentioned that it was about 40% undervalued. It was a great company, and it started to change into an uptrend over here. So I started to accumulate, and let's see how it's doing right now. Let me show you the one listed in the US. It's PNG AY. This is the Piranha Insurance. It's the largest insurance company in China, and it's listed in the US market through this ADR, PNGYA. So taking a quick look at it, there we go. Okay, so you can see this was the initial, oops. Okay, so this was the initial downtrend because of the trade war. It went into a consolidation pattern, right? So I was accumulating at this level of support here, right? Bought it over there, bought it over there. It broke out of the resistance, a strong resistance. It broke out, found support, added more there, and right now we are at 23.85. So again, all-time high is $25. We are about $2 away to the all-time high. But even then, it's still undervalued. I expect it to hit about $30, $35, $40 in the next couple of months or years. Probably months, okay? And the next stock I talked a lot about, I was very bullish on, was Tencent. Okay, Tencent is one of the largest tech companies in China and one of the biggest online gaming companies in the world, right? So again, you can see this was the downtrend triggered by the trade war and the temporary ban on new video games in China, right? So once it broke above the resistance, I said that's a great point of entry because it's undervalued. So let's take a look at Tencent. It's the one in the US, TCHY. Okay, there we go. So again, this is the downtrend, finding resistance over there, resistance. and it broke above this resistance level. Okay, made a new high, made a new low, right? So the moment, again, it makes higher highs, right? The moment a stock makes higher highs and higher lows, you can see it's a new change in trend. Okay, so the moment it crosses above the 50 moving average and the 20 EMA crosses above the 40 EMA, I start to take my first positions. And right now, we're at about $50, the one listed in the US, right? All-time high was 61. So again, we still have about $10 more to go, which is a 20% upside to all-time high. If it breaks above that, we'll probably see $70, $80, $90, right? So China stocks doing really well, China market doing really well. One of my most recent calls was on Boeing, right? So we know about the unfortunate accident in the planes, the software glitch. So Boeing had a big gap down, and I was saying that Boeing's a great company, it's undervalued. And if you watch my last video on the April market update on the 1st of April, I talked about Boeing, that I started accumulating positions. So let's see how that's doing. All right, there we go. So you can see Boeing has a strong level of resistance over there. There's very strong resistance. Broke out, all-time high was 446, gap down the bad news and finding support over there. All right, so currently it's right at the support level. Let me just zoom in here. Right, very strong level of support, and it's kind of like bouncing off. So I think most of the bad news has been baked into the stock, right? So cancellations have been announced. They have recently fixed their software glitch. So there shouldn't be any more bad news to bring the stock down. Unlikely, right? So we'll probably see it consolidate, and eventually it will bounce back to 450, 446 and beyond that. All right. All right, so one of the stocks that has recently got my attention is another Dow Jones stock, UnitedHealth, the biggest private health insurer in the US. Let's take a look at the stock and see what happened. So this stock has actually been a very consistent performer for the long run. Okay, but recently you can see that it had a pretty big sell-off, right? Especially in the last 2 days. We had this big drop over here, and it dropped just before earnings are going to be announced in a couple of days. So this was brought to my attention by my students. They say, Adam, you know, UnitedHealth just had a steep sell-off. Is it a buy? So I'm now doing research. I'd like to share with you how, again, I analyze the stock, whether I think it's an opportunity which is worth getting into. So as a value momentum investor, once I see a stock having a sell-off, I get excited. I see there's a potential opportunity to buy great companies at a huge discount once they start their upward momentum. So the question is it a good company, right? Is it a good company in the first place? If it's a lousy company, never touch it when it drops because it deserves to drop. But sometimes good companies drop for no good reason. It's purely emotional, it's irrational, and that's how we can take advantage of the market stupidity to make money from the market. All right, so let's take a look at UnitedHealth. Now, when I look at a company, the first things I want to ensure I only invest in very good businesses that have a very long run track record. And one of the first things I like to do is to take a look at, again, a very consistent growth in sales, net income, and cash flow from operations. So that's my first criteria. So let's take a look at UnitedHealth, UNH, over the last 10 years. So you can see that in the last 10 years, total revenue has been growing consistently. Every single year it's going up. And I only invest in these kind of businesses, right? If you take a look at this chart, you can see, boom, that's the total revenue growth for the last 10 years. That's what I like to see before I invest in a company. The next thing is I like to see consistent growth in net income. So let's look at net income over here, right? So again, net income is increasing consistently again for the last 10 years. The next thing I look at will be cash flow. Let's look at the cash flow from operations. Over here, there we are. And again, cash flow is increasing consistently for the last 10 years. So that passes one of my criteria, history of consistent performance. The next thing I look at is, does the company have an economic moat, a sustainable competitive advantage that puts it far ahead of its competition? So if you take a look at UNH in terms of its size, right, compared to its competitors, it is the biggest. It's far ahead from the nearest competitor. If you take a look at this map over here under healthcare plans, let me make it a bit bigger. Oops. Yeah. Under healthcare, so these are the companies in the same industry, private health insurance. And you can see that now the size of the square tells you how big the company is. And you can see UnitedHealth, UNH, it's way bigger than all its other competitors. So in fact, UNH, they've got 43 million people insured under their plans. And that represents 14%, 14% of the entire insured population in the United States. So they've got huge economies of scale that allow them to price much lower than all the other companies. And they've got a network effect where the more people that join them, the more benefits they get. So that's the sustainable competitive advantage that UNH has over its competitors. Now, the next thing is, does the company have growth potential? I like to invest in companies that have got pretty good growth potential. And looking at UNH, let's see, what has the growth been? Okay, so for the last 5 years, it has grown at 17% a year. It's pretty good. And for the next 5 years, projected is going to grow at 15% return a year. So 15% return a year growth is pretty decent. All right, so it's got good history, it's got growth, it's got a competitive advantage. If you also look at the balance sheet, it's got very low debt. So it's a very conservative company. That's what I like. And the next thing is, I do a valuation. What is the stock really worth based on the cash it generates, based on its assets, based on its debt? So this is my intrinsic value calculator. And again, for those of you who are in my program, the Value Momentum Investing course online or the Wealth Academy live program, you will be getting this calculator and you learn exactly how to use it. So it takes me less than 5 minutes to key in all the numbers, right? So UNH earns 15.7 billion a year in terms of cash flow from operations. It's got 36 billion in debt, 14 billion cash on hand, growing at a 15% growth, 954 million shares issued. So based on all these numbers, the value per share, the intrinsic value per share is $258. Okay, so that's how I value a stock. So I know that logically the stock is worth $258. That is its fair value, okay, if you will, fair value. What is it trading at right now? So again, 258, this is the fair value, and right now it's selling at 223. So it is definitely selling undervalued, okay? Roughly about 14% below valuation. So again, for people who are value investors, say, okay, it's a great company, it's undervalued, I'm gonna buy right now. But you know, I don't just buy just because it's undervalued, because I'm a value momentum investor. So I like to buy only when I see that there's a probability the price is going to go up right now. So I like to buy when I see a change in trend or when I see some kind of bullish reversal pattern, okay? Now, question is, if it's such a great company, okay, if it's worth $250, why is it selling at a discount? What's happening? What has caused this short-term sell-off? You know, I always say that in the short term, the market is irrational. The market is purely emotional. So that's why something great can be selling at a discount because of emotional reasons. And the main thing that happened was politics. That's right, this. So UnitedHealth stock suffered its biggest 2-day drop in 10 years because of Bernie Sanders' health plan. Now, for those of you who don't know politics in the US, Bernie Sanders is a Democrat who's running for president in 2020, together with many other Democrats. You've got Joe Biden, you've got Elizabeth Warren, you've got many Democrats running against Trump in 2020. Now, Bernie Sanders is known as pretty left-wing when it comes to politics. So he believes in Medicare, Medicaid for all. And basically, he has a policy which intends to, I'm not going to go into the details, but basically he wants to push through a policy that's going to cause more people to get insurance. That's a good thing, but the bad thing is that for the private health insurance companies like UNH, they could suffer a drop in their future premiums and income because of his plan. Now, question, has he been elected yet? No. Will he push his plan through? Well, no one knows, right? But see, the market is like a manic depressive. The market always tends to overreact. It overreacts to bad news. Oh my God, the world's coming to an end. It also overreacts to good news, right? So the market's like, this mood swing, right? And that's how you can make a lot of money from the markets if you think rationally and not get affected by its mood swings, right? So you can see that even before this has happened, the market has already anticipated the worst case scenario causing the share price to drop. Now, question is this. Will Bernie Sanders become president in 2020? Will he get this healthcare plan through Congress, through the Senate? No one knows, okay? I don't know myself, right? But it's unlikely, all right? Unlikely to happen. The reason is very simple. I think Bernie Sanders is a great guy. I love him. He cares for the people, but he's a bit too left, all right? So I don't think he's gonna get elected to be president, all right? I don't think so. I'll love if he was, because he's a nice guy. He cares for people. I don't think he will, right? Trump may get re-elected, or they may get another Democrat who's more center to beat Trump in 2020. I don't know about it. Now, even if he wins, to push through such a legislation, you got to get approval from Congress and the Senate, which is really difficult. It's going to take many, many years to come. So it's going to be unlikely that it's going to happen, or if it happens, it's going to be many years from now. So I think this is just an emotional reaction, and that's causing the stock to go down. And I think it's a great opportunity to buy the stock at a discount. Okay. Now, question is, from a technical perspective, when would I buy it? Now, again, there are two ways to play a stock. You can either play it as a trader, which is like a one-night stand, right? That's my analogy. Or as an investor, which is you're going to get married to the stock. So again, from a perspective of a trader, we only want to buy when we have got a technical setup, right? So we buy the dip on the uptrend, we buy a breakout from consolidation, or we can buy what we call the capitulation, which is a steep sell-off where we have a 90-degree drop and we wait for a bullish candlestick pattern, like a bullish engulfing pattern, a bullish pin bar, or one white soldier, right? So we need to wait for that pattern to appear to take a short-term trade and place a stop loss in case we are wrong. And as a trader, you never want to enter before earnings are announced. Okay, don't take that gamble. Wait for earnings to be announced and then take that trade if we see a trade opportunity, right? But I'm kind of looking at this more as an investor, because it's not something I will trade. I'll trade something else, but now, as an investor, I want to kind of get married to the stock, right? I believe in the company, so I like to accumulate it for the medium to long term. As an investor, I don't have a stop loss, right? It's like you're married, you don't need protection. But as a trader, you need protection in case shit happens, right? As an investor, I don't go in at one time. I tend to go in stages. It's like if I've got $100, I won't invest $100 up front. I'll put in $20 first, and I'll average in from there, okay? So as an investor, what I'll do is I'll enter when I see some kind of support level or some kind of change in trend. Now, if I take a look at the weekly charts, if I look at the, let's look at the 10-year weekly charts. Okay, there we go. So as an investor, I can look at the weekly charts as well. And I notice that on the weekly charts, there is a strong support at 212. Okay, there was a support at 235. It has broken that support. So unless earnings are going to be fantastic and mind-blowing, chances are the stock will go down and find support at 212. Okay, and so what I'll probably do is I may nibble a bit at the stock right now, right? As an investor, I may just buy a few shares before earnings, right? Because this is undervalued, but I won't commit that much. But I'm going to wait and see that if it drops to 212, a support of 212, and I see kind of like a bounce, like kind of a bullish candlestick pattern, I would accumulate more over there. But again, I won't go all in. I'll tend to go all in only when I see a clear change in trend, at least when I've got higher highs and higher lows. When it crosses above the 50 moving average, then I'll really take a bigger stake. So right now I'll nibble on it a bit possibly, and at 212 I could accumulate more if it does go to 212. Now if you take a look at the daily candles, let's take a look at the shorter term time frame that we are. So that's my support level over there, and again we see that 90-degree drop. All right, so normally when you see a 90-degree drop, call it parabolic, creates panic selling. And at the end of a drop, again, if you see a bullish candlestick pattern at a strong support, like a bullish pin bar, bullish engulfing, or one white soldier, right, we could start to take an initial entry as well. So I'll take a look at it in the next couple of days, and if there is a technical entry, I'll start to get into this stock. But fundamentally, it's a great company. Nothing wrong with it, right? In fact, sometimes I think, is this too good to be true? It's such a great company, it's selling at a discount. Sometimes when something's too good, I get a bit suspicious, right? It's like you go to Thailand, when you see a girl is too beautiful, normally they may not be a girl. when you bring them home, if you know what I'm talking about, right? Like, okay, jokes aside. Finally, people have been asking me a lot about IPOs, right? They say, hey, there's this new IPO called Lyft, L-Y-F-T. It's kind of like a competitor to Uber, and they said, Adam, do you buy IPOs, right? I never buy IPOs, never, right? Why? Because IPOs don't have a track record. When you buy an IPO, it's a new stock, it just got listed. I've got no idea, of its history, its track record, the trends. I've got no idea. So I'm buying blind, right? So I don't like that, right? But I know there are people who like that, right? It's like they like to go for the young virgin girls. I don't like that, right? I like older women who are more experienced, have got a track record, they know what they're doing. So to each his own. I don't like the young virgin ones. I like the older experienced ones. And the other reason I don't like to buy IPOs is this, right? Now remember that when Facebook first went IPO, all right, when it first went into the market, it dropped 50%. Before eventually recovering and going higher. When Visa first went IPO, it dropped 50% before recovering and going higher. So I don't like IPOs. People tend to think that IPOs is when you get in when a stock is just new, so I get in at a good price. Rubbish. Remember, an IPO means an initial public offering. The stock is being sold to the public for the first time. Now, who's selling the stock? The founders of the company. Now, as a founder, do you want to sell it at the highest price or the lowest price? Of course, at the highest price. So the founders always want to sell at the highest price when it goes IPO. So how do they get the highest price? Well, they'll tend to pump the numbers up, right? They'll tend to cut expenses and boost the numbers, and they sell it at a great price. And once they sell it, the real costs come in, right? So you never know what you're getting until it's been listed for at least 5 to 10 years. So that's why I prefer to get into stocks that have a track record. When you're buying an IPO, you're not sure if what you're seeing is the real thing. It's like, in the old days in China, before they marry the girl off to the man, they'll dress the girl up, they'll pump up the bra, they'll put nice makeup, okay, and you marry that person, and then when you go back, you take it all off, and you find that, oh, that's not what I wanted, right? That's why they call it a wonder bra. You know why they call it a wonder bra? Because once you take it off, you wonder where they are, right? So I don't like that. I like to, see it once everything has been exposed. Okay, so that's my latest market update. Hope you're making money as well. Hope you're enjoying this bull run. But remember that bull runs will never last forever. You gotta know when to take profit. You gotta know when to stop buying. All right, right now I don't think the US market is at the top yet, because although the bull run has been fantastic, it's been going up very strongly, but we're still below the all-time high. And we are still in a very nice trend that goes up like that. See, when the market goes up in a wave like that, it's sustainable, right? It's like healthy corrections along the way. But if the market goes up straight up, 90 degrees, when we call this euphoria, that's when I start to get out. That's when I start to sell, because that's when everyone is rushing to buy. You've got this great crescendo and boom, it collapses. So every bull market ends with a 90 degrees up when there's excitement, when everyone is buying the stock market. See, when everyone is buying the market, it goes up, that's when it's going to crash, right? A bull market is like sex. It feels the best just before it ends, right? Remember that. All right, so Adam Khoo, may the markets be with you, and I'll see you in the next video. Hi, so if you like the video, you can subscribe for more videos by clicking the subscribe button. If you want to find out more about our live training courses in Asia, go to wealthacademyglobal.com. For online professional stock and forex trading courses, you can go to piranhaprofits.com. So this is Adam Khoo, and I'll see you soon.